Strong earnings giving the market a lift today, wrapping up a very volatile week. Procter & Gamble shares surging after reporting strong sales in beauty products. Shares of American Express also higher. PayPal helping on the tech side. Joining me now is the editor and publisher of the Gartman Letter, Dennis Gartman. Dennis, a crazy week. It's been a crazy few weeks for the market, and we're not done yet. This last hour looks like it's going to be another doozy as well. Overall, what do you make of what we're seeing right now in the market?
Charles, I do not like the stock market at all. We've been in a bear market globally since January 29th. I keep an index of the top 10 stock markets around the world. We're down almost 12% from that high. We're down 6% year to date. If you have to buy stocks, the only place to buy them is here in the United States. But I think that we have entered a bear market. I've always said that once you've taken something down more than 7%, that's the dividing line between a bullish and a bearish move. And what really bothers me is two things. One, volume seems to come in on the downside, not on the upside. And two, for the old guard in the market, amongst which I count myself, we call this painting the tape. Here's a day when the Dow is up. The public is going to think that the stock market did well today when the Nasdaq is down. That's painting the tape, as we call it, to bring the public in. And I think the proper course of action is to be demonstrably less long of equities. It's still not an overt bear market here in the United States, but I think it's becoming one and soon shall be.
Although, Dennis, the Nasdaq has been the outperformer this year, could you argue that
Yes,
there's some jittery hands and we're seeing a rotation out of these high-flying names, these high-beta names, these names with outsized valuations into more stable names in the S&P and the Dow?
Well, that's obviously what's going on. That is not the hallmark, however, of a bull market. In a bull market, high-tech, high beta, high PE stocks lead you to the upside. In a bear market, high tech, high beta, high PE stocks lead you to the downside. And I think that's really what's going on. I think, yes, we are in fact seeing a movement from high flyers to higher quality, high flyers to greater safety. And I think that's very normal at this part of after a protracted bull market, and I think the beginnings of a bear market.
Dennis, the first hiccup today, the Dow was up 200 points, appeared to be on reports that Xiamen Airlines, one of the fastest growing airlines in China and the one that President Xi seems to like the most, may actually give an order to Airbus rather than Boeing. It's speculation right now, but it does call into play the global economy and our battle with China. How important is it that get resolved sooner rather than later?
Well, I'm afraid it's probably going to be resolved in favor of Airbus and not in favor of Boeing or the other suppliers here in the United States. I think that was a definitive statement, and I think it should be taken very seriously. This was not something that was done off the cuff, and I think it does not bode well for the domestic airline production facilities here in the United States.
Quickly, because we have less than a minute, but I do want to get your downside risk, okay, because you're saying this is a bear market, or at least the beginnings of one. How much risk are we talking about?
Oh, you could take stocks down 15, 20% over the course of the next year. That would not be atypical. In fact, that would be a relatively beneficial bear market. That would be a very atypical bear market. Bear markets can be 25, 30, and 40% lower. I don't think we'll get that far because the economy is indeed doing well and probably is going to continue to do well. But can we take stocks down 15 to 20% from their highs? Without question.
All right. Dennis Gartman, have a great weekend. Appreciate it, Dennis.